Hello everyone. Last night US market had a biggest sell-off since the August month. So in this video, let's discuss those in detail. In addition, we can discuss our regular pre-market stuff for today, 4th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, it's very important to understand what really happened yesterday in the Indian market. Both Nifty and Bank Nifty opened positive, but for most part of the day, it traded slightly with negative bias. If required, please pause and have a look. I'm comparing the Nifty's rate of change with respect to S&P 500 future market. As we see here, until 2 p.m., Nifty just mindlessly followed the S&P 500 future. Especially in this area at 12:30 p.m., first, S&P 500 moved to positive territory and Nifty just followed. Then 1 p.m. when S&P 500 turns down for the next hour, Nifty also turned down and followed, but only till 2 p.m. So after 2 p.m. it's a different story. We'll discuss in a moment. But until 2 p.m. yesterday price action is the typical example how if there is no major event means then our Indian market price action just follows the US market. Hence, while trading, it's always important to keep an eye out for the S&P 500 future market price action. Anyway, now back to our chart. In that, I'm just adding the Bank Nifty. Because of the sudden breakout in it at 2:30 p.m., despite the global momentum weakness, here Indian market started to defy the other global indices. Actually, the breakout is not just in banking stocks. The breakout was more of the inclusive financial stocks and it is much more severe in Fin Nifty. But at that live moment, I didn't capture the graph. Now coming to the reasons, first and foremost, as I said, it was severe in Fin Nifty and yesterday was Fin Nifty expiry. So maybe the breakout might be due to the expiry day volatility. In addition, there are two important influential things happened at the same time. I'm going to ask the viewers a general question. The regular viewers know this background. We have been discussing this for a while. Like Nifty is trading near its upper end of 2-year PE ratio and Bank Nifty is trading at the lower end of last 10-year PE ratio. So clearly in the past several months, Bank Nifty was and is underperforming Nifty. My question is why? Why banking stocks is underperforming? Comparing to Nifty valuation, Bank Nifty valuation is crazy cheaper. I might come up with a detailed video for this in the weekend, but the quick answer is liquidity issue. Between Jan to July this year, in order to address the bank's liquidity issue, almost every 15 days once, RBI had come up with a VRR auction for 50,000 crore rupees, 1 lakh crore rupees, etc. That's how, with the mercy of RBI, Indian banks survived this first 6 months of the year. But now, yesterday, as per RBI data, Indian banks' liquidity from being deficit, it improved to surplus of 2.33 lakh crore rupees. In addition, WACR weighted average call rate dropped from 6.49 to 6.47. We know RBI's interest rate is 6.5%. This difference now directly improves the bank's net interest margin. So this improvement in the bank's liquidity issue possibly might trigger the short covering. Then the next one, this might be the most potential of the reasons for the breakout. Not the official SEBI release, but the SEBI member Ananth Narayanan outlined the list of reforms that SEBI intend to implement in the next few days in the Confederation of Indian Industry Conference. Out of this list of reforms, one of the important one is that SEBI is planning to make the registration for foreign investors very easy, like a simple KYC form if they intend to invest in the Indian government bond means. If required, please pause and have a read. This is how much the top 3 Indian banks is holding the government bonds. SBI roughly 8 to 10 lakh crore assets, ICICI Bank 3 to 4 lakh crore assets and HDFC Bank 2.5 to 3.5 lakh crore assets. In addition, already in the last August month, FII invested around 23,000 crore rupees into the Indian government bonds. Now here, making it easy for foreign investors to buy Indian government bonds will increase the business transaction of these banks. Again, this also will increase the fund inflow and will increase the business for the public finance companies like REC, PFC, and hence might be the reason yesterday those companies also had the final hour positive breakout along with the top 3 banks. Whether this both the news like SEBI's new reform and bank improved liquidity influenced the yesterday's market or not, that is secondary since already it's done. But the important thing is both the info is sector influencing one, possibly for the short term. Hope everyone able to follow me. Those were the quick takeaway from yesterday's Indian market. Now coming to US market, the manufacturing PMI data came as terrible, especially the manufacturing prices. Manufacturing PMI data for the August month came as 47.2 against the expectation of 47.5. Here, anything below 50 is contraction, so the sector contracted more than market expected. But the more issue is on the prices. For the August month, market expected the prices around 52.1, which means roughly 2% increase. However, the data came as 54, so 4% manufacturing prices increased in the August month. So this literally created the panic selling in the US market. Dow Jones down by 1.5%, S&P 500 decreased 2.12%, and Nasdaq crashed 3.25%. In case of VIX, it increased 33% and moved to 20 from below 15. Regarding oil, opposite reason to the last pre-market video, Libya expects to reopen the oil production, which in turn pushed down the oil price by 5%. At the time of this video, WTI crude trading around $70 per barrel and Brent crude trading at $73.5 per barrel. Despite all these crazy US market negativity, Indian ADR was not that bad. In fact, in line with yesterday's Indian market, ICICI Bank managed to close 0.6% positive and HDFC Bank was down only around 0.3%. Whereas both the IT stocks ADR down above 1%, more negative than Indian market close. So from the ADR perspective, banks is mixed and IT clearly negative. Then about GIFT Nifty, early morning today it closed at 25,242, equating it with our spot market. For now, it's indicating the gap down opening of around 100 to 150 points. So those were the things happened yesterday in the global market. Now let's look at the new India related info. First about AU Small Finance Bank. Yesterday in the aftermarket hours, they issued the statement that with SEBI, they have now applied for universal banking license. Here, this is the significant change in their business strategy. Hence, we can expect market to react for it. Second, from today and this week, Indian government mentioned in their SEBI filing that they are going to sell around 6.5% of the General Insurance Corporation of India stock in the open market. Hence, we can expect GIC and to some extent LIC also will be on focus today. As a summary, US market closed significantly negative and the global momentum deteriorated severely. However, GIFT Nifty and Indian ADR were not that negative. For now, it's indicating just the gap down opening of 100 to 150 points. And I don't know, for some reason, Indian market looks resilient, especially now banking started to support the market. Will it continue? Only time will tell the answer. If you ask me what I want means, I want the market to close either flat or negative. Since yesterday, exactly before the breakout, I sold a bunch of 51,700 call option with hedge at 52,200. Then once the breakout around 3:10 p.m. again I averaged it to 51,900. So hopefully today Bank Nifty won't expire above 15,700. Let's see. Moving on about the things to look out. At 10:30 a.m. India's service payment data is due. Then at 1:30 p.m. Europe's service payment data and UK's service payment data both are scheduled release. And in the night for US, July month-end jobs opening and US trade import and export details are some of the items we need to keep an eye out today. Coming to technical, Nifty opened a gap up of around 35 points. After that, immediately it trimmed all the gains and continued the consolidation. However, it maintained the positive close for the 14th day in a row. Thus, on the daily chart, Nifty formed a small bearish candlestick pattern and traded within the previous day's range. So, the momentum indicators RSI and MACD haven't changed its stance. It maintained the negative bias on the hourly chart but showed a positive trend on the daily chart. So together we can say it's an indication of a possible more consolidation with Nifty fluctuating within a narrow range. Hence, a decisive close above 25,300 is required for the continuation of upward journey towards 25,500 to 25,600 zone with immediate support at 25,200 followed by 25,000 being the crucial support. In case of Bank Nifty, it outperformed Nifty and finally settled above 15,500 level for the first time in the last 1 month. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with a long lower shadow indicating buying interest at lower levels with a positive bias in both hourly and daily momentum indicators. Additionally, it maintained a higher high formation for the fourth consecutive session. Hence, at present, if Bank Nifty holds above 51,500 means, then most probably it will continue its journey towards 52,000 and then 52,350 levels. On the downside, 51,250 is the support. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike followed by 25,300 and 25,600 with maximum new call option rating at 25,600 strike and then 25,300 and 25,500. On the put side, the maximum open interest was at 25,000 strike followed by 24,500 and 24,000 with maximum new put option rating at 25,300 strike and then 25,200 and 24,900. Thus from options data, it's indicating 25,300 is likely to be the immediate resistance for Nifty. Above this level, 25,500 to 25,600 zone is the area to watch, while 25,000 is expected to be the key support area. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.